Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Let's take a look at the Singapore dollar and the Japanese yen and see where we can find zones. On the monthly, we have price dropping, forming these strong bearish candles, and then it finally rallied and creating this area of demand zone. And while it was rallying, it touched this level of supply, and then it also formed its own supply zone here. So as price retested these zones, it dropped and then come back up, did not touch it, but dropped again. So even though it's been tested, it's still relatively strong. So that's why we say that we don't want to, just because it's been tested doesn't mean that the next time it comes back it's gonna go right through it. We want to wait. Even if price gets up to here, we don't want to make the assumption that the next time it comes it's gonna go up. Usually it does. Usually when price comes back to these areas, it will penetrate deeper and then eventually break through it. Or if the momentum of the trend has been reversed, then it's going to come back and easily break this. But as we can see here, that it's not strong enough to break it, and so supply zone is in control. But then we do have a very strong area of demand down here that we want to go long, or at least wait for validation. On the weekly, we see that price is obviously in a downtrend. We can draw a trend line on these two latest peaks, and then it made this strong drop and creating this area of supply on the weekly. And the daily is pretty much the same thing. It dropped, forming this level of supply, and the 4-hour, it made a level of demand down here. I'm going to make it a transparent rectangle because it's been broken. Well, it's been broken by this, so we can draw the area of supply as right here. Okay. So, but this level is not tested. It's not validated or anything. It's just a zone. It has to be validated after you learn some core rules about this strategy. But as of right now, it's a potential zone. It's not validated, and it's definitely not tradable. What's tradable is if you trade the weekly, daily, 4-hour. What's tradable is this zone up here. It has to come back up to this zone before it's tradable. Any of these in between here is not tradable unless if price continues to go down and then it comes back up, and then you can trade it. But if price just immediately comes back up, it has lower odds of working out. So we want to go short bias until we reach this area of demand on the monthly, and then at that point you want to wait for a reversal to happen and no more shorting. You want to wait for a reversal to happen, or you want to wait for validation, wait for the price to drop down here, and then show its way moving back up, and then you buy the dip and it goes back up. Okay, so that is the analysis on the Singapore dollar versus Japanese yen. Hope you found a lot of value in these videos, and I hope these videos help you in your trading journey and in your trading plan. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.